I expect in the next 6 months, and this is month one in the countdown. We're already closing November. We started, so December's month one. But in the next couple quarters after that November close, I think you'll see silver with sharp sell-offs in the process reach at least 200 and possibly a lot higher in a rampage. Yeah, there'll be a correction in the middle somewhere, probably. There was in 1979, there was a little correction in the middle that fooled people. Same in 2010 to 11. There was a reversal month. There was a fake out, and you exploded more. So sometime, let's say mid to late first quarter, you might get a correction that you could really call a correction. Not what we're seeing today. This is just a quick jerk, okay? But sit back and give it a couple quarters, and I think you'll see that it doesn't just get to what you could call a fair value based on the degradation in the money unit, meaning $200 an ounce or so, but probably overshoot it vastly.
Silver has officially broken out of a 50-year suppression zone. According to momentum analyst Michael Oliver, this is month one of a powerful acceleration phase that could push silver beyond $200 within the next 6 months. Expect extreme volatility, sharp corrections, and an emotional upside as supply deficits, monetary stress, and bond market instability collide. This is not a normal bull market. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
The silver crisis that we're facing in terms of supply demand and its essential nature. I think even Elon Musk the other day said something to that effect, that we got to have silver for AI and so forth, and it's essential in all these tech things and so forth. It used to be, silver primarily industrial use was in photographs. Snap a picture, the processing involved the silver in the film. Now it's solar panels, powered the solar panels, the AI, massive technology buildup and so forth, where silver is just everywhere in there. And maybe in microscopic levels, but nevertheless pervasive and essential. And yet we've had 5 years, I understand, of we don't focus on supply demand. I'm looking mainly at the technicals, although I am fully aware of larger fundamentals beyond just silver's industrial thing. But we've got 5 years of supply deficit to demand. And it's not getting better, despite the rising price. In most markets, if a commodity is too low to incentivize more of the commodity, you take the price up. What happened that caused us to say new reality commencing is the spread relationship between silver and gold, the mama metal, gold, and the lesser child of the monetary metal, silver. And as we just talked about, gold keeps making higher highs over the decades and silver's caught in a box. Well, the spread relationship, when we plot an ounce of silver to an ounce of gold and express it as a percent, we plot that, okay? And we analyze that technically. The close of November, we had a spread breakout, meaning while silver's been underperforming gold since that 2020 surge in silver, remember when the post-COVID thing, silver exploded, doubled, and gold went up 40%. Silver outperformed them, but in the years that followed it eroded back down in relative performance, meaning, it was going up with gold, but at a lesser pace. But that ended at the November close. And November, we closed in the mid-50s. Okay, here we are a month later with a couple days left, and we're in the 70s. Wow. $20 in a month, that's pretty cool. Well, what warned of that wasn't that silver's in an uptrend. It's been an uptrend for a couple years, no big deal. It's the spread breakout, when silver broke out relative to gold. The same thing happened back in 1979 during that rush in silver. It went from like the teens to $50 in 5 or 6 months, okay? It's when the spread broke out, silver favoring over gold, that suddenly silver went rampant. And it both went up, but silver just left the page, okay? Same thing happened in 2010 during that already aged bull market in silver, been going up for years. There was a point at which its spread broke out versus gold, and in the next 7 months, silver doubled in a half. Boom, doubled in a half. Very quickly. We argued when the spread broke out this time in November that process is now commencing here for silver. And if you go back and look at that copper I talked about, or the lead charts even, when you entered that new search for a new reality, you did it so quickly. It was always a couple quarters. It's very amazing. And the same with 79 to 80. It was a couple quarters, like 5-6 months. In the case of 10 to 11, it was 7 months from the spread breakout to the peak of silver at 50. But the process of getting from the old range to the new range was a thunderbolt. It wasn't, oh, let's get up there slowly and methodological, in an incremental manner. It was literally ripped the page off. And it no doubt overdid itself in getting to the new reality and then pulled back into a new reality. Same occurred with lead in 2007. Very exciting metal. Okay. Silver's been caught in this 50-year range. Gold hasn't been caught in a 50-year range. It has 8-fold moves. It goes way above the prior 1980 high or the 2011 high, et cetera, et cetera. Silver been capped. What's going on there? Is it a dog? Is it really non-essential? Lead did it. Copper did it. And I could find a dozen other markets that have done something similar over the past 50 years or so. But silver was contained. Well, it's no longer contained, and therefore it's going to do something excessive on the upside, getting to a new level of price reality. And it's going to be fast. And we're in that process, and we're just in that process. Only in the past month have we entered that phase. So put your seatbelt on and be ready for days like what we're seeing today. When you were interviewing me, silver had a drop from $82 down to 71. And everything's, it's the end of the world. No, it's, another 10% so drop in a heartbeat. And it doesn't interrupt the real process underneath that's going on. What's going to cause it to be more widespread? The monetization of monetary metals again, the recognition that, gosh, this past very long human lifetime, we have just printed 100 years or so. We've had a central bank here for 110 years that prints and prints in cycles. And it's true in Japan, it's true in Europe, etc. So, and it hasn't worked. And you've got to create, though, probably panic. And you'll never see panic on the face of a Fed governor. Okay, they're always, everything's under control. But I'm talking about the average guy. We think silver's going to hundreds, okay? And I can't pin it down, except to say that I know if you fundamentally go back and factor in the decay in the U.S. dollar buying power, in other words, the quantity of dollars that exist, which goes up like, 80, 90% every 10 years, the supply of dollars. I'm not talking dollar versus euro or yen or anything, but literally the buying power of the fiat unit. And if you factored in getting to a price that reflects 1980, for example, when it was 50, or 2011 when it was 50, you'd be in a couple $100 just to get back to that level in terms of real buying power. When a market makes mistakes, either overpricing or underpricing, and everybody's especially aware of overpricing because we've seen stock market bubbles. And whenever that occurs, too high for too long, when it snaps, it doesn't do it rationally. It quite often overshoots where it ought to be. So it goes too deep, or just like on the upside, it goes too high for too long and then snaps the other way. Silver's been caught in a box for 50 years. You can look at copper or lead, and we've run studies on this, where they were caught in a range for multiple decades, 1970s, 80s, 90s, 2000, and mid to late 2005, for example, copper had been in this old reality of price range. And it broke out, and literally in a couple of quarters, it quadrupled. And it wasn't in sync with other base metals. It was on its own, okay? Quadrupled in price literally in several quarters, going to a new reality, in other words. And then when it finally leveled off for the subsequent decades, past 20 years or so, it leveled off at a range that was like 4 times the average price of that prior range.
Why are we seeing these wild swings going on?
Oh, it's just part of the process. First off, best to measure the swings not in arithmetic points or dollars, but measured in percent scale. So, we just had a drop here today, literally in a couple hours from, like $10 or so, about 15% in silver. You can go back at lesser price levels over the last couple of years and see also 10, 15% drops, fewer dollars involved, et cetera. And so as we proceed higher, and I don't think this is just a shin kick interruption, you'll see plenty of them. If silver has just broken out of a range since the mid-70s on price, but only marginally, it took out 50, it went to 80, and it's not even a double yet. Get to 100, at least you could say it doubled, okay? The spread relation between silver and gold, when we measure it our way, which is divide silver into gold, expressed as a percent. In 1980, it was 6.5% of the price of gold, 1 ounce of silver divided into gold. In 2011, when it surged in that other silver bull market, the spread got up to over 3% of the price of an ounce of gold. Right now, we're just above 1.5%. Okay, so why should, if silver's going to go into a new reality in terms of its price and more or less catch up to gold, for example, what it's been doing, why shouldn't the spread also maybe do that? Now think about that. I mean, just to get to the 3% is a doubling in the current relative value of silver to gold. Doubling. So whatever gold does, silver could do twice as much just to get to the 2011 levels. And if you go to the 1980 levels and to take that high out as well, why not? Price taking out the range high. Why should the relative performance take out its prior highs? That's over 6. Oh, good grief. I mean, divide an ounce of gold by silver and you won't believe where it might lead you. So I think that's something to consider. Now, we're not saying it's got to do that. But what we are arguing is in the 2 quarters after that spread breakout, expect something you didn't expect.